Well, welcome to Business Deals and Real Talk with the Choes. I'm Holly, joined by Johnathan.
Hi, I'm Jonathan Che, Holly worker.
He's my better half, but today we're joined by Yvonne Ward. She's a senior escrow officer and branch manager at Weston Title and Escrow in Bend, Oregon. Yvonne comes with us with over, I think, 4 decades of industry experience and more than 30 years of doing closings on very complex transactions and simple ones too. But she's well known for her ability to navigate challenging commercial, business, residential deals, deliver a seamless closing experience, and she brings a commitment and care to each client. And we've experienced that firsthand with all the clients that she has helped us with. She's a native Oregonian. Yvonne takes pride in the community and blends personal service and professional experience. And so, Yvonne, welcome to Business Deals and Real Talk with the Choes. We're thrilled to have you. Feel free to fill in if I left anything out.
Yeah. Nope, you got
Well,
it.
well, one of the things that I would say about Yvonne, I'm super excited. We've been working with Yvonne for over 6 years now. In office, we have been using only exclusively Yvonne, and she's been providing amazing service, just knowledgeable. You can't get better. So thank you for all of your help, and thank you for being on the show.
Yep, absolutely. I know. I enjoy it. I didn't realize it had been that many years. I told somebody the other day it was only a couple of years. I didn't realize we've been that long. So that's great.
Yeah,
Time
that's
flies when
good.
you're having fun.
That's good you're not tired of us yet.
Nope.
So, Yvonne, for those unfamiliar, how would you describe your role of escrow and title in real estate or business acquisition deal?
Well, our role is one of those that we're usually the part of the puzzle that nobody knows we exist. Because we're not supposed to be in the forefront, we're behind the scenes supporting everybody and acting as the neutral party. So we literally work with the buyers and the sellers, and then all of the ancillary people being real estate agents, brokers, mortgage brokers, lenders, attorneys are all ancillary to us because our main goal is to provide service to the buyer and the seller, who are our principals to the transaction. But yeah, most people don't know what title and escrow is until they actually enter into a transaction, and then they realize, oh, that's where we put our money. That's where we put all of our signed documents. So
No, I get it. So, could you walk us through like high level escrow timeline and what the milestone from just opening to closing?
Well, yeah, we come into the picture once there's actually a written agreement. So once the buyers and sellers of a transaction have actually came to an agreement, put it into writing, then we come into play at that point. So we take that signed agreement, we read through the terms, and then if it's a real estate transaction, we set up the title work to be happening. So the title work is crucial to us because that tells us who actually owns the property, what items are against that property as far as easements or liens or ownership. Sometimes the people that think they're the sellers actually didn't follow through at some point along the way and it didn't get in their name. So we actually make sure our buyer and seller are who they are. And then after that, we try to start just gathering information. So I call it like gathering string. You just keep pulling in little bits and pieces until you get this big ball of string. So we start asking the buyer questions like, are you getting a loan? Are you buying it with somebody else? We ask the sellers, are you going to do a 1031 exchange, for example? Are you going to take this money and try to defer your tax to another piece of property? Are you selling it outright? Do you have loans to pay off? That type of thing. If they're a entity of sorts, we start asking for documentation that their entity is active and that it's able to do business in the state. And then we kind of wait for the title report because that really is our foundation. Once we have a chance to look at that, then we match up what the buyer and seller have told us, make sure that the seller does show up on the title report. If there's a loan that they think they're paying off, that loan shows up on there. If there's back taxes, and then we start preparing documentation. We ask all the parties, when do you want to close? And then we start to work on our end clearing title. What we call clearing title is making sure it's absolutely free and clear for that buyer when they take ownership to it. And then we prepare the deed, have been taking in money at that point. We took in earnest money. It sits in our client trust account. And then if there's a lender involved, we start getting them involved into the transaction, start asking for their documentation. And then at the end, everybody comes in. Sometimes if they're in the area, they come into my closing room and they sit at my table and they sign their documents to finish out the transaction.
That's the fun part, right? Honestly, based on what you're saying, it's wow. It sounds like a lot to me, but to me, it feels like you're doing the due diligence of ownership, making sure there's no discrepancies, and just finding out, if there is anything, to point it out and address it early on.
Right. That's my whole key is we never want surprises. So we hope we ask enough questions and communicate well enough to get the information we need so that there's not a surprise at the end. So sometimes when we get the title report, there is a surprise.
Yeah.
There's 2 loans on the property and the seller only thought there was 1, and there was maybe a line of credit that, they never used, but they literally took the property as collateral. So sometimes those things come up. Usually they're all fixable. All of them are able to be cleared. Very, very seldom, I'm knocking on wood as I say this, very seldom is there a problem that we can't fix. So
Yeah, and we've experienced that with you. There's even though there's a problem identified, there's always a solution.
I always tell people that there's always a way to fix anything. So
And sometimes business transactions can get complex. It has real estate, it has lending, it has other third parties. Can you tell us a little bit about how you ensure that the buyers are getting free and clear, unencumbered business? It's similar, yet it's different. Could you share with us on the business side some of the differences?
Yep. So on the business side, because there's no real estate, we typically don't have a title report to look at. So that's where I have to do a little more due diligence, searching out information and making sure the seller's giving us a lot of information. But we do a lot of lookup on the state of Oregon website, again, because there's entities usually involved. To the business name, we have to make sure it's active, and we have to make sure that the seller is the person that can sign for that entity. So that's always helpful. And if they've used that business or any part of the inventory or any of that stuff for a loan, then we have done a search with the state of Oregon. It's called the UCC department, and we have to pay off those liens as well. So if they bought a bunch of equipment and that equipment was bought on time, that would have to be paid. Or if they got an SBA loan when they bought that business, it has to be paid off as well. We also checked with the taxing authorities because you have desks and chairs and computers and things like that, and the county taxes you on those items, your office. So we have to make sure that the taxes are paid current with the county, and also sometimes prepay those taxes for the following year, depending on what time of year we close. So yeah, there's a little bit different with that because I don't have like pieces of paper in front of me that says, this is what's on that property. I have to go searching for it and ask a lot of questions. So the name of the game is communicate, and be like an investigative reporter. You're asking questions to get them to say what you need from them to find that stuff. So
wow,
it's fun.
Uncovering.
I still think it's fun.
Yeah, that's awesome.
Yeah, I guess in a nutshell, having you do that research really helps to protect the buyers. The biggest one you said is making sure that the person who's selling it has the ability to sell it.
Right.
They don't want to buy a business, kind of like I got a bridge for you to buy type of situation, and then protect them against any encumbrances, because most of the Main Street business sales are asset purchases and they're debt-free, cash-free. So you want to certainly make sure that there are no debts. It really does protect the transaction and buyer from any unknown circumstances, so that can be taken care of before they actually write the check. I know that Yvonne made it sound easy.
Yeah.
That's why we love her. But it can get complex. Real estate and lenders involved. She makes sure that everybody's interests are equally met as a neutral third party escrow agent. So I think this is really important role that you serve, but could you talk a little bit more about being a third party, what the responsibilities are and how that benefits both the buyers and sellers?
Yeah, I mean, I think the biggest benefit is that we don't represent either side. So we have no skin in the game other than making sure it closes for the parties. So we have no interest in the business or property. We don't negotiate anything on behalf of anybody. We're literally there to just take all of that information in, all the money in, all the documents that they want. So we're kind of like the clearinghouse, if you want to say, of money and documents. So we work with the lenders, but we literally aren't representing the buyer or negotiating. We're just taking in what the buyer has already talked to their lender about and the terms that they want to do. And we just make sure it gets fulfilled. So by taking instruction from the lender, we still have to get permission from the buyer that what the lender is telling us and what the terms of the loan is what they agreed to. So I think that's the difference from us, is that we don't have any say in it. We're just following the direction of what everybody wants to have happen and make sure that we all end up finish line with what everybody was expecting.
No, that's a great point. And I mean, that being neutral really helps too, and make sure to get that going. Because I think that we try to explain that to both buyers and sellers. Like, she's looking out for the transaction to make sure that buyers, it's free and clear, the business free, but also for seller that your ownership is what it is. Because like what you said, sometimes they don't know that there was a loan or something and it didn't, that they were responsible for it.
Yeah. I mean, sometimes it is kind of funny, but sometimes lenders don't really explain to people, we're going to use that collateral, and what I just had you sign, I'm going to file something and it's going to encumber that. And you have until you pay us off, we're going to leave it on there. What the other thing that happens is sometimes things get paid off, doesn't belong there. So that's the other issue we have to deal with sometimes.
And that could be an easy fix, right? As long as they show you the paid letter, then you can have that lien removed.
Yeah, the only time we run into a real problem is if it's a bank that's been acquired and acquired and acquired.
Got it. Yeah.
The new bank doesn't know that the old bank got paid off, and so they have to look through records. And then if they can prove to themselves that they can't find that person owes them money, they'll sometimes release it. Okay. But yeah, if you get a bank that was in existence in the 80s, let's say, they sold it in the 90s to another bank or merged, and then again in the 2000s, then those records are sometimes not carried forward very well. So, but again, everything's curable.
Yeah.
There's always a way.
I feel that way about you. Because you know how to get things done. So.
Yeah. That's what 4 decades does for you.
Wow. I bet you, Yvonne, your checklist is in your head. I don't think you have a physical checklist.
Yeah, I don't know.
That's right.
Yeah.
So how are escrow and closing costs determined? I think that's like usually the number one question we get, like what the variable fees, the variables that affect the fees, I guess.
Yeah. And so real estate transactions, I'll go off that first. In Oregon, there's kind of just a standard. So in Oregon, the escrow fee that they pay to us is split between the buyer and seller. In the title insurance realm of things, the seller always pays for that owner's policy to be provided to the buyer because it's part of the fine print of their sales agreement. And then the buyer, because if they get a loan and they need money to buy it, it's their responsibility to pay for the title insurance for their lender. So any cost that has to do with that loan is paid for by the buyer. Any recording fees, because their ownership and lending is their benefit again, the buyer is always charged recording fees and filing fees. The seller, though, because they are responsible to clear title and make sure that they can give free and clear title to the buyer, they pay for any release fees. So if they've got a loan and there's a release fee that has to be paid, they pay it. If there is hard costs that we have to pay to get lien cert done, the seller pays for those. But that's typical. Escrow fees split half and half. Title insurance for the new owner is paid for by the seller, and title insurance for the lender is paid for by the buyer. On a business transaction, it's kind of the same thing. Usually, the escrow fee is split half and half. We don't have title insurance, so there's no cost there. But again, the seller has to pay for any clearance of liens that might be against that business. So if we have to release a UCC, or maybe they used one of their properties as collateral for that loan, there's going to be a release fee to take that off that other property. And we usually are asked to collect for that as well. And then the buyer, if we have an assumed business name, the seller's been caring for that business and the buyer wants it, the buyer pays for that cost, if there is one, to put that name of the business for them. I mean, typically, for us anyway, it's our escrow fee that gets split. But again, either type of transaction, anything's negotiable. the seller says, you know what, I'm giving you a great deal, buyer, you're going to pay all of the closing costs. Or if the buyer says, I'm scraping by just to get this and you want to sell, so you pay for all the closing costs. So, I mean, it just depends.
Okay.
Yeah, if they're doing, let's say the seller is going to carry the note for the buyer. And so the buyer is going to make payments. There's a collection escrow that gets set up, which is different than our closing escrow. It's another neutral third party. And that fee, again, can be split half and half. It can be paid for by the buyer. A lot of times we see the seller pays the setup, the buyer pays the monthly. So it could go either way. But yeah, there's rules and yet they can be negotiated.
I think we tell them, right, everything's negotiable.
Yep, absolutely everything.
So the other question is, and they often ask, is how does the funding process work? Like when the money goes into escrow, what happens?
Yep. So once all of the documents are signed and all of the money is in our account, we consider that we're ready to close. And closing for a real estate transaction is when we record the documents of public record in the county where the property. So once we record those documents, putting the new buyer in title or the lender, their loan against property, that's closing to us. And then we disperse out the funds based on what we had them sign on their closing statement. You know, the loans get paid off, the real estate agents get paid, the lender gets paid their fees, recording fees get paid, and then we get paid at last.
And we do too.
Yep. So
Yvonne, talking about there's technology everywhere and things always changing. Talk about the different ways. You talked a little bit about people coming in, actually physically coming in, but can you talk about the different options that buyers and sellers have attending closing, how that works, whether remotely or locally?
So yeah, things happen, life happens. So sometimes people don't live in the same area of the property or the business that they're selling. They've moved on somewhere else. So we have different options depending on the circumstances. We try to see if people are technology savvy, where we could use electronic signatures, and we use the DocuSign platform to get signatures that way. So if it's a cash transaction, definitely buyers can DocuSign, because there's absolutely nothing that has to be notarized. In a real estate transaction, the seller usually has to sign at least a deed that has to be notarized, and that has to be an original for us to be able to record in the county. So the seller will have to either come in person and sit in front of me to sign, or we have to set them up with maybe a remote notary, or we have sister companies because we're part of the Fidelity National Title network across the US. We can sometimes find a sister company that will sign them where they're at. Other option is they could do a power of attorney. So if somebody's not going to be in the area or whatever and wants to get power of attorney, that works for a personal transaction. But if it's a business or a trust, it has to run down through that entity, and they have to assign people within that entity or trust. They can't do a power of attorney for that. But we also, let's say somebody goes to Greece right in the middle of this transaction. They're like, well, we had this plan for months and months and months, and I'm going to be in Greece when it's closing. What do we do? Sometimes we do what's called a RON signing. So it's a remote online notary. All the parties have to be aware of it. They all have to acknowledge it, especially if there's a bank. But it's done just kind of like what we're doing. It's remote and you're on a camera. You have to be a US citizen. You have to have 5 years of credit history in the US, and you have to have your passport with you or a couple of different government issued IDs, so that when you're online doing the notary, you can prove to that notary that you are who you say you are. And they ask you questions. So before they will actually do the notary, they'll ask you questions, and that's why you have to have at least 5 years credit history. They pull that information off of that database and ask you questions only you would know. If you can't pass that, then they won't do that notary. But it's saved us a couple of times when people have been out of the country, either for business or maybe they had a family emergency or whatever, that they were able to do a RON signing. And especially if it's cash, there's no lender involved. Usually it works. But a lot of the lenders don't recognize it right now, because the notary is just like a stamp on there that says they saw them, over a remote camera, basically, and then notarized it. But it's an option.
Yeah, no, that's great to know that.
Yeah.
So I know you talked about the lenders. So with the lender piece, like if they're getting an SBA loan, then they would need a wet signature, right? So a mobile notary can do that too then?
Correct. Yeah. And some of on business deals, the SBA lenders have been, I think, pretty great about taking sometimes DocuSign signatures.
Oh, okay.
So if they don't have stuff that has to be recorded in the county, a lot of the SBA loans, they do take collateral of their own property, the borrower's property. Those have to be notarized. But if it's just a loan where they have enough, collateral otherwise, they've been letting them DocuSign stuff. So, I mean, it's case by case, I guess, or lender by lender, but
yeah, so there's a lot more flexibility today than, in the past, where their only option was literally come in and sign an escrow officer. So that's great to know.
Yeah. And it's really helpful too, like I always thought I didn't really want to be part of a national company, but it really saves me when people are in other areas and we have so many sister companies that you can call on, and we try to pay it forward. So, if somebody is doing a transaction in Maryland and they need help in Oregon, we help them because at some point we're going to ask them to help us. So
yeah, I appreciate that because I know my clients have definitely relied on your sister company, so we do appreciate that. But
yeah.
I wanted to kind of circle back with best practices and pitfalls. Like, what are the most frequent mistakes you see buyers or sellers making during escrow? Like, how can we help them run it more smoothly, I guess?
Yeah, I would say being unprepared. I mean, I think that's kind of where our pitfalls is like you have buyers that maybe have money sitting in investment accounts and they're like, yeah, we have $1 million cash, we can pay for this, but it's not liquid yet. And then they wait too long to start making that liquid to move it into an account to be able to pay for that property. So sometimes that holds us up because they didn't call soon enough. Their financial planner tells them, well, I'm sorry, we got to sell the stock and we got to move that money and that type of thing. So being unprepared money wise. The other thing is, when they come to the closing table, a lot of times the businesses or trusts don't have bank accounts in those entities. So we have to pay it out to whoever owns that property or business. And so if they have a trust, if they don't have an account set up in a trust, we still have to pay it out to that. And so that is frustrating sometimes for sellers. They have to either go set one up right away or talk to their bank to see if they can somehow sign off on that money to put it into their personal account. So I would say,
yeah, and time consuming too to try to get one set up last minute.
Or they're going to take a trip and they didn't bother to let anybody know that, oh, by the way, you said we wanted to close on October 15, but gosh, we're not going to be around anywhere. So those type of things sometimes comes up at the last minute, but again, life happens, emergencies happen. We just have to kind of go with the flow, but sometimes they don't think it through, or maybe repairs have to be done on buildings and they haven't got that all lined up soon enough.
Yeah. And I know with business, like, I think inventory is really important too, right? Have that done. Did you say like 24 hours before, 24 to 48 hours before closing too?
So yeah, it's just planning. Some people aren't planners. So they need people like you guys and us to remind them this is kind of the steps, and so you have to be ready.
I think so. You need a good team on your side. It's hard to do it alone.
Yep. Yeah. And if they've not done it for a long time, they don't remember what it was like to sell or buy.
One of the things that happens in the financial services is fraud. So I know that when we're getting ready to fund, there's caution that you always make our clients aware of. But could you talk about some of the fraud that's out there and how to make sure that you don't get caught in that?
A lot of fraudsters out there trying to grab money. They don't rob banks anymore. They go on computers and they rob people that way. But we send out our wire instructions to buyers up front. That's one of the first things we send out. And we literally tell them 2 or 3 times, you're not going to get another set of wire instructions from us. This is our wire instruction. If anybody tries to give you anything different, please call us. We've had a few, and what happens is fraudsters are so good, they can get in, tap into sometimes the the email chains back and forth. If, they're good and they see, oh, Western Title is sending out wire instructions, talking back and forth with a buyer and seller, there must be a transaction going on. They grab that email address, they take our information off of an email. So like my signature block, post it onto that email, making it look like it's coming from me, and telling that person, hey, the escrow officer, your escrow officer wanted me to get a hold of you. I work with her. They've changed their bank account. They want you to send the money to this bank account instead. Please acknowledge. We've had people that they almost fell for it, and then they just had that gut feeling like, no, they told us they don't change their wire instructions. So they called. We've had a couple here in our actual office that got stopped before it happened. Thank goodness, because they made that phone call. But yeah, I mean, it happens almost every day, unfortunately, across the US. All of our sister companies, we get a report, millions and millions and millions of dollars almost get diverted all the time. So
read through the instructions that you get, and before they wire, is it a good best practice before they fund escrow before closing to confirm the wire instructions with you?
Yep.
How do you want them to do that?
Yeah, we actually tell them to call us. And if they got an email, don't call the phone number on the email, call something else that they know is our number, Google us, whatever, and actually go over those wire instructions to make sure. And on the reverse side, we do that with the sellers. Even though we take the information from the sellers, sometimes in person, we still make an extra phone call right before we wire out to verify them again. So it's just good practice back and forth to just double check, triple check to make sure we have the right accounts.
No, that's definitely a great point. So Yvonne, any final tip you'd want to give for buyers or sellers heading towards closing?
Yeah, I would just say make sure your ID is current. It's surprising how many people, I mean, we can take expired ID up to a year, but when people forget to have their ID updated, it makes it a problem because they can't get a notary. So, make sure that happens. Make sure your bank accounts are in the right names of, who you're selling. And even on the buyer side, if they're getting a loan and the lender has already saw where their money is sitting, you can't go borrow that money from somebody else and bring the money into escrow. It has to come from the account the lender thought your money was coming from. So don't move money around. Don't buy stuff at the last minute. Because anything suspicious, are you taking a large deposit in? Mom and dad gave you money for whatever, and it just plops into your account. It looks suspicious, and then it kind of stops stuff. So I would say, just make sure you communicate with all the professionals that you're working with to make sure you don't do something that will cause delays. So
No, that's a great tip, because I think sometimes people don't realize that, or they haven't updated things unless they're traveling or something.
Yeah.
I'd like to give one final tip. I think the best thing that you can do is to prepare, pay attention to the escrow instructions. And if you're in Oregon, give Yvonne a call. She and her team are just the best we've ever worked with. So I haven't given that recommendation to anybody else ever, but Yvonne and her team are extremely professional. They know what they're doing. And then they're just super good, nice people too. So high recommendation.
Well, thank you.
And for our listeners, Yvonne, how can they reach you?
So the best way, my direct number at work is the 541-330-1219. You can always email me at yvonne.ward@westerntitle.com or teamward@westerntitle.com. That gets to me and my assistant. I take text messages too, and that's my cell phone number, which is 541-971-5945.
Thank you so much, Yvonne. This has been so enlightening. Like every time I talk to you, even though we've been doing this for a while, I learned something new.
Yeah, there you go. Yeah. And if we don't learn something new every day, then, it wasn't productive.
That is true.
I know, I learn every day too.
Well, thank you again for joining us. Until next time on Business Deals and Real Talk with the Choes.